All right, good morning, everyone. Today is August 23rd, 2023, and I'm back with another Wednesday edition of the live show, which I do most Wednesdays, unless something really super important comes up. But anyhow, welcome to the show, and hope everyone's doing well. I know it's hot out there. It's kind of the dog days of summer, so there's basically, a week and a half left in the summer, I would say, before Labor Day weekend. And so it's kind of the dog days of summer, and the market itself kind of in an interesting spot. The earnings season is just about over. It's getting close to being over. So there was a couple earnings that came out this morning, and the stocks get hammered. So, but we usually see that around earnings season. The mega cap, big caps tend to do well and that type of thing. But the market itself, we'll take a look at the S&P here. We're actually in sort of pullback mode here, right? We've had a little bit of I wouldn't call it a correction yet, but I'd call it it's a little bit more than a dip, more than a pullback. It's probably what you'd consider to be a pullback. That line's awful thick. So I started off today kind of zoomed into the current price action, and let me go with the standard trend line there. So there's a couple ways to draw this. Obviously, if you're using candlesticks, it's going to look like that, and kind of a steep downward sloping trend line. I've talked about this before. This is one of those trend lines that the steeper the trend line, the more likely it is to get broken just by virtue of the market trading sideways. So I really am not a huge fan of steep trend lines, but so with my open, high, low, close charts, I usually prefer to draw them across the absolute highs. That's always so got a trend line that looks something like that. And again, it's kind of a steep downward sloping trend line. But the interesting thing to note here is how nice this perfect pivot low looks here, right? A few days back, um, you get these sell downs and then you kind of had a rough few days there. But interestingly enough, just standard old technical analysis, old school, looking at the charts, when you get a sell off like we had here, and you get a few days where it kind of really sort of pulls away from the mean, so to speak, you get that gap down and sort of reversal. And then, of course, it takes a couple of days to confirm it, but this is actually kind of ideal. This is an ideal, really good looking pivot low. And so that's sort of, but so the bigger question is, what kind of rally do we see off of this? We're getting sort of up, down, up, down. Like I said, it's basically it's the dog days of summer, and so typically in August I expect the action to be relatively dull, but this year it seems like there's a lot going on because because we actually started this this pullback in August. Kind of started right at the beginning of the month. You remember last time I was on, I talked about the outside reversal day up here, and which is also a bearish engulfing candle. And the funny thing about that, it was that stands out. Anybody that looks at charts, it stood out like a sore thumb, and it almost seemed too easy. Sometimes when things seem too easy, you have to sort of question their validity. But I mean, that right there was like, the warning shot across the bow, red flag, everything. And amazingly enough, the next couple of days, I think might have left everybody a little confused, because typically after, a day like that, you don't expect to see a gap up, and then a couple of days, inside days. But then of course, there you go. Basically the second trading day of August, we got the gap down, and then the pullback, which everyone's been waiting for. And the funny thing is that, when the market's going up, everyone says they're waiting for a pullback to buy, and then when you start to get that pullback, they get nervous, right? And of course, we've discussed on the show how the macro picture is kind of sketchy, and the market. appears to be overvalued, but you can't see this on the chart right now. But actually, I'll pull the chart up a little bit so you can see it, because previous shows here recently we talked about this RSI getting really extended, and so back up over here, and then of course the negative divergence. So you can see on the chart when that RSI, gets up well over 70, sometimes it works it off just by moving sideways a little bit, but it's a caution flag. It's another caution flag. So you see that RSI get up there, and then of course, we had this, what you call an evening star. It's funny, I talk about candlestick vernacular while I'm looking at open, high, low, close charts, but I also look at the candlestick charts too. I have this exact same, chart set up in candlestick format, and I like to look through those. But my go-to charts are always open, high, low, close, just because I've always sort of preferred them. But anyway, so you can see the downward sloping trend line there, right? And that's the first thing to watch. And the other thing is this is the 50-day moving average, and so obviously that's overhead resistance. Didn't quite get, extremely oversold, but the RSI did, make it down towards the bottom there. So we got a little bit of oversold condition. We got the pivot low. We have this trend line, and of course, a little overhead resistance at the 50-day. I have another chart with the 20-day on it, and the 20 days up there too, about to cross down through the 50. So let's zoom out a little bit, because within the context of this pullback, there's also, let me go back to the beginning of the year here. It also seems reasonable that you could draw an uptrend line across the lows, across these most recent lows. So, and that's assuming that this pivot low here is going to hold for a little bit. So the market's kind of in, it's in an interesting spot right here, because one of two things is going to happen. It's going to break back down below this trend line, and of course, that low right there. There's also a horizontal line, but let me move this trend line here, and let me put it all the way back at the October low, right? Remember that? I mean, that was the panic low. And let me just extend it like that. So, and as long as I'm over here, there's one more trend line that seems to come into play here. So in theory, and this is more of a zone, rather than draw a trend line, I think it's more appropriate to draw sort of a zone here, right? So it makes more sense, because there's major support, kind of in this whole area right here. And so what'll be interesting to see is, what transpires from here, whether we get a bit of a rally and then sort of a failure, right? So I'm not a huge fan of this particular trend line. I just drew it on there because if you zoom way in, obviously that's kind of, now that we've come off that pivot low, there's potential there. But if I had to guess, and I hate to guess on stuff like this, but if I had to guess, I would say that there's going to be some sort of a rally, and that comes up to a certain point, and then maybe we rally back up to 4,500 and then pull back or whatever. But typically with this sort of pattern here, and keep in mind that since this March low, like that was the last significant pullback that we had. Since that March low, we've had a tremendous rally for quite a few months, even though April and May were basically sideways. So after a high like we saw there, we get that first sell off, we rally back up to a certain point, and kind of looks like it wants to carry a little bit higher, maybe the underside of that 50. So, and there's some time to go by too, right? We still have, like I said, yeah, a little over a week until Labor Day weekend, September, and so, the market may just kind of clang around here. Um, I'd be kind of surprised if this low gets broken unless there's like some really bad news that comes out, but typically things pick up in September, the action will pick up. So we might see some dull price action here, but at some point, over the next, 2 to 3 weeks, I would expect to see the market, perhaps rally up, maybe test the underside of the 50-day, maybe, come up here to support close to 4,500. And then if we get another little sell down, we'll know like, where to really what angle to put this trend line at. So what would surprise me the most is if the market just, turned right back around, made a V bottom and went up here back to 4,600. That would probably be the most surprising thing. But hey, you never know. I mean, anything can happen. So all we can do is use these trend lines sort of as a guide. So anyway, not a huge fan of the upper trend line, but as I mentioned, there's a giant support zone down here, and that kind of coincides with this rising trend line. And here's your 200-day moving average sloping up, right? So, hey, who knows? I mean, in the larger context, of things, it's entirely possible. If you look at this, yeah, and here's something else too. Is let me go back to my. It's interesting how the market sort of rallied up, to resistance very close to. I mean, we came within shouting distance of the all-time high in the history of the world, which again is a little bit surprising. Um, so you got to go all the way back to the beginning, the beginning of 2022, really, to see that sort of resistance zone that the market ran straight up into, and quite frankly, since that March low, there hasn't really been a pullback of any significance until just here recently, and lots of interesting stuff going on the chart too. As long as I'm here, before I switch symbols, I might as well draw, that little sort of double bottom right there, right? So, I mean, the thing about technical analysis, obviously, is it doesn't typically have a whole lot of predictive value, right? Like I can predict that either that level there, which is kind of a nice short-term double bottom. You could potentially see a head and shoulders form here. We know where the major resistance is. We know where the major support is. We got, this level. We've got this rising trend line. So, there's quite a bit going on here, but the market itself is sort of in no man's land. And it's also kind of interesting how this last leg kind of formed and how quickly it sort of retraced, and so that's pretty interesting right there. I mean, it's an interesting sort of pattern, and who knows? I mean, out in the future, if I extend this trend line here, there we go. If I extend this trend line out in the future, I mean, it's if we do get any sort of major follow through on the sell-off we're seeing, something like back here, and even last fall or whatever, we got a pretty significant sell-off. They talk about seasonality, and August is, seasonally speaking, August is kind of a dull month, and it's never really a great month, so to speak. I think, you see these statistics, and August is, on average down like 1% or something like that, or half a, 0.1%. I mean, August is usually kind of a flat to down month. It's not seasonally a good month for the market. And September, historically and seasonally, is the worst month for the market. And so that's kind of interesting. September, most people think it's October because of the famous crashes that have happened in October, but um, September, I believe, if I'm not mistaken, is the seasonally weakest month of the year, and so keep that in mind. Seems to me that testing this trend line, testing this support, might sort of be the healthiest thing for the market. Um, there's just so much going on with downgrades of the banks, and you hear these things about banks and interest rates going up and inflation, and now people are starting to get nervous about interest rates. And the funny thing is, as bad as inflation is, like I said last time I was on here, the damage has already been done on that, um, and so it's no mystery that the rate of inflation actually peaked last summer. I think it was last July, and so here we are a year later, and the inflation rate has come down all that time, but obviously prices have remained elevated. But all this stuff that I read about the housing market and commercial real estate and all the things that are affected by these higher interest rates, people are starting to cry uncle, about the Fed continuing to raise rates. Mortgage rates now are over 7%, and so that's kind of that's the flip side of it is. And of course, we all know the story. Back during the pandemic, they slashed rates to zero and created, $6 trillion or roughly out of thin air to, keep things going during the pandemic. And so, you know, I know that all these, PhD economists have studied economic history, and so they know that, creating that kind of money, basically printing $6 trillion is going to, have a negative, is going to cause inflation down the road, and that's exactly what happened. And so now, they're using their one tool that, they think historically has caused inflation to come back down, or the rate of inflation, I should say, to come back down. And so, they're just continuing to raise interest rates. And, it's debatable whether there's how many more rate hikes there are, but it's fairly likely that there's one more rate hike coming because, the economic numbers seem to be, they're all over the map, honestly, but the general consensus is that the economy's doing pretty good. I think I saw recently where like GDP's running, theoretically running over 5%. um, anyway, it's weird because we're kind of in an environment now where you can use statistics to say, the economy sucks or the economy's great. And so, and just about anything else too. I mean, earnings come out and it's all subjective. Back in the old days, things were a little bit more cut and dry. And of course, I don't want to neglect to mention that they changed the way that CPI was calculated recently. And the funny thing about that is I'm losing track of, since I started following this stuff closely, I'm losing track of how many times that they've actually changed the way that CPI is calculated. And so that kind of bugs me too. Because it wasn't that many years ago they changed it, and then just recently they changed it. And so, I guess it depends on what you buy. So it's a funny thing because there's certain things that I buy that the price can differ significantly, and I'm talking like 30% price difference between one store and another. So it's like it's like getting a beer at a 5-star hotel is going to cost a lot more than buying a 6-pack at the grocery store and bringing it home, and then there's everything in between. And so my main point here, I got kind of sidetracked, is that prices are going to remain elevated, and that's putting a pinch on a lot of people. And then, the housing market's a mess and it's a disaster, and the banks seem to be struggling because of interest rates, right? Because, when interest rates were nothing, they were buying all these bonds, and so there's a lot of as I said before, the macro picture is just not, the macro picture is just not all that great. And so, but nevertheless, there's always a lag in everything, and the market is not the economy or whatever the old saying is. And so, the market can, and of course, now you throw in like these zero DTE, 0 days to expiration options, and that just throws a whole nother thing in the mix. And so it's more about liquidity. You remember it wasn't that long ago that, we took kind of a longer term view on some of these charts, and I talked about the big giant sort of cup that was forming, and it would be nice to get a handle. And so the Qs, I mean, this is a pretty nice looking pattern, it goes all the way back to the pandemic. So you got your big giant cup, and then, this is a very sort of tight handle here. I would sort of expect a little bit more sort of range on a handle, and the handles can form for a long time too. But quite frankly, this is a pretty nice chart. This is a good looking chart, and so there are a couple ways of looking at this. One is you draw that downtrend line there. If it breaks that downtrend line, then it's not a very steep downtrend line, and so it's very likely that it's going to retest the highs and maybe poke above it, that type of thing. So the Nasdaq's the place to be, and of course it has that beautiful, perfect sort of pivot low work, and you can see the 50-day right there. It's kind of working right up to the underside of that 50-day. Let's look at the Dow. I don't really look at the Dow that much. Man, Dow. Well, hang on. Let's look at the actual Dow. Whoops. I'm still. You guys probably remember years and years and years ago, I used to use that free stock charts, and I swear it was so much easier. I was so used to it, probably for a decade. I'd do these shows, and remember we had our old show where we'd a bunch of us would get on there and look through all the charts and do this stuff. But anyway, the free stock charts, which a couple of years ago, no longer viable because it was built in something called Microsoft Silverlight. But anyway, I found that those were just so easy to mark up the charts, and I still struggle with the stock charts. Although I'll tell you, I do like the stock charts ACP, I guess they call it, much better than the standard stock charts. These are their high-tech charts. I really like these. Yeah, so I mean Dow really within. I said the Nasdaq came within shouting distance for the S&P, but this came within spitting distance of the all-time highs here. And so it is what it is. The Dow's a little weirder or whatever, but still got the trend line is a little bit different on the Dow. Like this is kind of the old proverbial W bottom, which is I've found over the years is one of the most bullish patterns that exists. And every time I see like a W on the chart, I always think to myself, it can't happen again. But what happens is when you get these W patterns, and this holds true for individual stocks, you get these W patterns like this, and once it breaks sort of that neckline, more times than not, you get a really significant rally. I mean, I've seen so many times where the market itself has formed like those sort of W patterns or individual stocks, and And lo and behold, when you get over like the middle hump, I guess you'd call it, the market tends to make a pretty significant move. So I remember, some years back, a lot of V bottoms. It seemed like there was a period of time in the market where everything was just a V bottom. And generally speaking, the W bottom, or like sort of a rounding bottom, is probably a stronger sort of signal because there's more consolidation, sort of down at the lows or whatever, but then a V bottom, right? Like V bottoms are a little weird, but we haven't seen a whole lot of those lately, other than let me go back to the pandemic. I guess you could definitely call that a V bottom. So that was the last time we saw like a major V bottom in the market, but anyhow, I digress. What I was looking at here is this upward sloping trend line on the old Dow. So you can see, it's below the 50-day too. Um, the 50-day moving average is a major moving average everybody looks at, but sometimes the market, actually uses the 50-day as support or resistance, and other times, it can be all over it, you chop around it. So anyway, the Dow looks a lot closer to, and notice the 200-day moving on average on the Dow is like way up here, closer to the price than the other indexes. So, but then again, you got this sort of rounding top, and it's pulled back the resistance. So it's hard to say what the Dow's going to do. Last thing I want to look at is the Russell here. And look at the Russell. Perfect bounce off of the 200-day moving average there. So that's kind of interesting. And of course, we noted, the past few times that we've looked at through the indexes like this, we we noted that it was right up against all this resistance here, and I probably drew a zone, but um, sometimes maybe it's just me because I've been doing this for so long, and so sometimes things seem like really obvious to those of us that have been looking through charts and drawing trend lines and support and resistance and all that for all these years. It was pretty darn obvious that the Russell 2000 was right up against this resistance, and you see how it got rejected. And now, it's retraced about, I won't say half, but it's retraced. Wouldn't surprise me if it was a fib number here, somewhere around here, 38.2. From the actual lows back here, right? So notice the double bottom from last June, and the lows in the major indexes occurred in October. And interestingly enough, the Russell, actually the IWM. So for some reason I can't find the Russell 2000 symbol its stock charts, and I even looked one time and then I gave up because I tried to search for Russell 2000, and it's like IWM. So anyway, close enough for government work, but so this is in a big giant sort of sideways trading range and got rejected off of the resistance point a few weeks back or earlier in the month, and it was like kind of so obvious that you think, well, maybe it's going to poke above a little bit and come back down or whatever, but it's just sometimes it's uncanny how fairly obvious technical, inflection points like this. The interesting thing about this is you got, two technical inflection points. You got that sort of run up consolidation and that poke at like this, almost exactly at the same high from last time this year. And so, well, anyway, sometimes it surprises me how uncanny. And then of course, just a few days back here, last week, you had a perfect sort of retest, spike low, and bounce off the 200-day moving average. So back in the old days, I used to talk a lot about how I thought the Russell 2000 kind of, I'm not going to say a leading indicator of sorts, but I used to think that the Russell 2000 represented like sort of the average stock more so than when you're looking at the S&P or Dow or Nasdaq or whatever. I mean, some of you've been around for decades. Remember me talking about how the Russell 2000 sort of feels like the average stock. So, and then you probably recall back over here me talking a lot about that. And so interestingly enough, I mean, the Russell can spend a lot of time just sort of in a range. That sort of breakout right there is pretty insidious, because going back to what I was saying before, those of us that follow the technicals in that, I mean, that was a legitimate breakout after a very, very, after 8 months of a trading range. You get that breakout, and then, well, obviously sometimes you expect maybe it'll come back down and retest where it broke out, but that was one of the all-time fake outs that I think I've seen in a I won't call it a major index, because it's funny how Russell 2000 doesn't get nearly the respect, even though it's 2,000 smaller stocks, as the other indexes, because they don't even consider it a major index. The three major indexes, blah blah blah. But anyway, interesting spot here. As I pointed out, the S&P is kind of in no man's land here. The Russell in this big giant range, having pulled back and retraced, not quite half of it, but enough of it to say that, hey, it's kind of in no man's land too. And so anything can kind of happen from here, and I do expect the next couple of weeks to kind of be dull. I know it's back to school, and I don't know how that affects things, but I know that this summer there was tons of people at the beach and vacationers, and everything was rocking. And then, boy, when back to school happens, you go out to the beach and and there's nobody out there during the week, so there's no family vacations happening. There are not many, and of course the weekends are a little bit different. But anyhow, so you got back to school, and then people look forward to Labor Day weekend, and then that's sort of officially the start of fall. And based on my electric bill and how hot it's been this summer, and I know there's lots of places that you wouldn't expect to be as hot as it is here in Florida that are even worse off with that heat dome. So I think everybody's ready for some cooler weather, ready for fall, and I think that these next couple weeks are just sort of the dog days of summer, and so it's going to be really interesting to see how this kind of manifests, what happens from here going into Labor Day weekend, right? So there's support levels, there's resistance levels, there's all these different levels that are kind of important, but it's very difficult to know what actually transpires or how meaningful it is. And typically the institutions come back from whatever it is the institutions do over the summertime, vacationing in the Hamptons or something, I don't know. But as many years back as I can remember, the dog days of summer and the summer doldrums and all that. Although August has been exciting, as I mentioned, because we finally, got a little action with this pullback here. And so, the action probably will really start to heat up more shortly after Labor Day. Maybe not that first week, but after that. And so, anyway, well, hey, thanks for tuning in. I will see you back here, same time, same place next week.